or is it 114 times 450? Am I crazy? Like
One.
cross multiply?
Okay. Let me check together, and we will see. Now, the first one we find the difference, right? So, what is the difference now?
114.
100, yeah, 140, 100% plus 7% times 2, correct? Because it's 2 year. So 7% times 2, which is 100 plus 7 times 2 is 100 for
14.
correct. Okay, so first step is correct. And then what should we rewrite the questions?
Oh, actually, you're right in the question. But like, what is 114% of 450?
Yes, what is the 14% of 450? So then now we write in general formula is over of equal to percent over 100, right? And what are we looking for? We're looking for,
How much he has after 2 years?
yeah, how much we have after 2 year is is.
Okay.
Yeah, so we're looking for is. So let's say is x of is
Of is, let me check. Apparently, I put $450.
yes $450. That is correct. Equal to one fourteen
Oh,
over
equal 114% over 100.
correct. Now to solve for x, so we do cross multiply,
Multiply.
multiplications. 100
So
x. Mhm.
x equals 450 times 114, right?
Yes. Okay, so far so good. 100x
No,
equals oh
no, I was right the first time. It was 51,300 when you multiply it. I
okay.
just forgot it.
Okay, so when we multiply, the answer is
51.
51,300. Oh, I know what you did wrong. Is that the answer?
I forgot to multiply. That's what I did wrong.
Okay, now we multiply and get 51,300.
Is it 513?
Yes. So then this is not x, this is 100x. So to solve for x, we divide by
100.
100. Yes, 100. And that is $513. Okay, this is quite reasonable. Okay, $513. Hmm, reasonable. Okay, so far so good, right? Any question or anything to ask?
No.
Okay, so let's move to the next part. It's called sell tax. Like we always have the tax which the government taken from us, and in return we have the public service, uh, road constructions, the hospital, the uh, police service, and something so on. The tax is quite various by the country or by the state. As far as I know, in America, different states have different tax, right?
If you want to live in a country that has no tax, you have to be a really rich person because the country has to be really rich. For example, probably somewhere like Monaco or something.
Yes,
You know, in Monaco.
but if that country don't collect tax, how do they have the incomes? If they don't have the income, there is less public service, right? They don't give
It's a popular country, so like I think they get money off like
natural resources.
natural resources, like maybe some oil stuff or
Yeah, some oil.
like a lot of foreigners come to there, like to Monaco, and I've seen a lot of videos.
Yeah, I think maybe like Kuwait, Kuwait, uh, Saudi Arabia still have some tax, but not what we call value add tax. The tax from the food, the tax from the products is not acquired,
Not
but
not
the
job tax, kind of money tax.
yes, check account property tax. But actually, there's a lot of tax that is acquired from us. We have so basically what we have is value add tax. We call it VAT, withholding tax, public lighting tax, property tax, salary tax.
There's a lot of tax.
It's a lot of tax. I'm not accountant. If accountant will be like super expert on that,
Yeah.
but, but anything is subject to tax, tax. But if you raise the tax very high, the tax rate very high, the people who the citizen who are living in that will be very concerned, and you will not be anytime selected for the next term.
Yeah.
Yes.
What did you say? I went out to get a tissue.
Okay. So the tax have to be balanced. It has to be proportion to what the income of the citizen have. If the government raise tax very high, then I think next term they won't be elected as the next governor or the leaders.
Yeah.
And roughly the tax in Cambodia is about 10% for value add tax. So every
What you
time,
said the country is 10% of their like money.
yes, the tax rate is 10%. For example, so the meaning of tax is like you purchasing a price. Let's say the calculator. The calculator is $10. This tool is $10. The tax will be 10%, so it will be $1 plus. So if I purchase this one, I purchase with $11. $10 to the seller, $1 to the government. That's how the tax system works. So the government
Yeah.
that $1, $1, $1, that 10%, 10%, 10%, and in return they build roads, they have the police service, the
I like I like places like I think there's like a country in Europe. I think it's Switzerland. Might not, but I like it when they like have the tax with the price already. So it's like $3 with tax.
oh that
Like
yeah, sometimes they
like
already including tax, so $3
yeah,
excluding tax, so meaning the original price is even lesser than $2 something.
I like places like that. So then I won't have to stress out about tax. Because in America they're like it's $4 without tax, but like said with. Are you okay with that?
Yes, yes, yes. Uh, I think that make more sense. I think America is make more sense because it's written more detailed. Some country they say like including tax, but is it they really give the tax to the
Yeah.
government?
There's like other types of taxes.
Yeah, there's a lot of type of tax. We have like the tax rate is different. In
Mm.
Cambodia, the rate that is high is called profit tax.
Is what is computer tax?
Profit tax.
Profit tax?
Yes, or in another
In
word,
like
in the
you, as in you're the customer that's buying,
in
or as in you're the seller?
no. Profit tax is okay, like the official word is called capital gain tax. Capital gain tax, meaning if you purchase a property, let's say you purchase a property with $1 million, in the next few year you sell back in return and get, let's say like you sold at $2 million. So meaning you make $1 million, right? You make a profit of $1 million.
So kind of like interest.
No, it's not interest. It the profit. Interest. So the word interest is when you get from the loan, the profit you get from the loans. That is
Can
the
we just like stop learning about percentages and then all of a sudden have you teach me about like the interest, whatever thing, which because I don't understand, but like I want to.
uh, so the interest is the term that is okay. Maybe to use about interest. So interest is the profit you earn from the loans.
Like only a loan?
Yeah, earn from loans, only from the loan. That is called interest. But what I
What
mean
about
loan is also sometimes when you put money in a saving account, the capital gains is also
wait, a loan is also when you put money in a savings account?
yeah, when you put money in the banks and the increase amount that you have is the profit that you earn is the interest as well.
So when you put money in a savings account, you can also get interest from that?
Yes, yes, yes. In a saving account, you also have the interest.
What's a savings account?
Saving account. Okay, so when you open the account in, do you have your own account?
Like yeah, but like my mom controls it.
Okay, when you have a bank account, you put the money in. But if you put like a saving account, the interest is very low. I think maybe 2%, 3% maximum.
So like you don't put it in a bank, you put it in an account for yourself.
Bank
Like
account, not in a bank. It's that the bank account. What is your question? Not in a bank, but in account. No, in a
in a
bank account.
bank account.
Yeah, in a bank account.
Bank.
So let me give you two scenario. Scenario one, let's say scenario one, you put money in. You put money in bank account. If you put the money in bank account we have two types of money deposit. First one we call saving account. Saving,
Wait, so
yes.
wait, what? No, explain to me that again.
So okay, scenario we have two scenario. First one we put money in account. Second one will be we take a loan from the bank.
Put money into a bank account
Yeah, we will put
and
money in the bank, meaning we are rich. We have a lot of money, so we put the money in the banks. Yeah, that's scenario one. We
no,
rich.
what about the savings account?
So when we put the money in the bank account, we have two type of account. First one we call saving account, meaning that you can withdraw the money back anytime. Today I want to, uh, I put today in the evening I take it back. It's up to you. Second day I take withdraw some money. Let's say like I today I put $10,000, but next day I take out $1,000. Later day I will take $500 out. So it's up to me.
Yeah.
The interest rate that I will receive may be very low, maybe 2% or 3%. 2% or
You can retrieve it whenever you want, but
yeah,
the value would be low.
we can withdraw any amount and any money from that account, but the interest rate will be low for you, for me.
For you.
Yes, yes, yes. That is called saving account. Another types is when we put the money, we put as the fixed deposit.
In a what?
Fixed deposit, fixed,
Oh, fixed deposit.
yeah, fixed deposit. Fixed deposit, we have the term, so we have the what we call maturity date.
Maturity gate.
Date.
Maturity date.
Maturity date. So date, maturity date. So maturity date is the date that you can withdraw the monies. Meaning that I put the money today, let's say 15 December 2023. So then I put the money in that account, and the bank issue the certificate. That maturity date will be 14 December 2014. So meaning 1 years ahead. Until 1 years ahead, I can withdraw my money.
Is it like the more money you put in, the more longer?
It's
Or
the more longer, but we have to set the date. So between now until next year, I cannot withdraw the money. If I withdraw the money, meaning I break the fixed deposit, I don't gain any interest.
oh, okay.
Yes, yes, yes. But this, if it's up until the maturity date, you will get a lot of, not a lot of, it's between 7% to 8% interest, meaning that we earn profit a little bit more than the saving account. I think this is the system in Cambodia. We have saving account and a fixed deposit, but just extra knowledge. As far as I know, in America we have what it called credits,
Credit card?
credit card. Yes,
Oh, I know what a credit card and
yeah.
debit card is. The credit card is when you like
Mm-hmm.
use money from the bank to pay for your stuff,
Mm-hmm.
but you have to pay it back. But a debit is where you have your own money,
Yes. So these two
right?
is debits, meaning we already have our money and put in the bank, then we can spend. But for credit card, for credit, meaning we spend the money from the bank, but then you have to pay back. If you don't pay back on time, they will cut with the interest.
Wait, what would they do?
Uh, if you don't pay back, repay back on time. Let's say today, okay, I don't have the money in a bank account, but I have a credit card that value about, let's say, $1,000. So I go to
Yeah.
spend, yeah, go shopping and spend. So today I spend, let's say, $500. It's okay. It's okay. You spend, you still can spend more, even though it's not your money yet. So later day I spend another $100. So total this month I spent $600. But don't forget, you need to put
Yeah.
the money back $600 by the end of this month. If you don't put money back $600, you will be charged with extra interest. It will be six
So
hundred.
like the opposite.
Yeah, like an option. It's like $600 plus something. It's the interest that we set between us and the bank.
Yeah. Okay.
Yeah. Somehow it's about 12% per years. 12% per years. I think that's how we spend. And, Okay, this is scenario one. Scenario two is something like this. Okay, scenario two is we don't have money, so we borrow the money from the bank, or we borrow money from the friend, microfinance, something like that.
Yeah.
Okay. So the scenario two. So scenario two, let's say scenario two is we don't have money, but we need money. So we take the loan, that's called loan, from a bank. Loan from a bank. So when we take a loan from the bank, of course, like we don't have to have. Of course, even us, we don't want to give money to someone without gaining anything, right? Without gaining anything.
Yeah.
So we want that somehow a little profit for me. If I hand somebody of money for borrowing, that people should give me something. That something is called interest. Let's say I give somebody $10,000 for the loan, and then next year they will give me $10,000 plus $700 because $700 is the interest.
Wait, so I gave somebody $10,000 for a loan?
Yes. So, for example, I borrow you $10,000 for 1 year. So in next year, if I only return with $10,000, you will feel like, oh, that is very unfair. I give the money to you. You should come back with some interest, right?
Yeah.
Yes. Then I say like, oh, okay. So $10,000 plus $700, it's your interest. And then you say like, oh, I'm happy with the $700, right?
Yeah.
Yeah. So if it's not this $700, it seems unfair to everyone, to both sides. Like this side seems like not balanced.
Wait, so if I get some interest, then what do they get?
Uh,
I think
the loaner. So the loaner is the one that give the loan. The borrower is the one that receiving the loans. So after return back, the borrower will return the principal. This is called the principal plus the interest. The original
so. Those are like
the capital gains. Yes, the original plus the gain, the profits. And that profit, that term of profit called interest.
okay.
Yes, that type of profit is called interest. But the profit, the term profit is very large. Let's say like the profit. The profit, uh, let's say interest is part of profit. Interest is part of profit. If we are doing business, we just make, let's say like we make a donut today. Just after baking, we generate $2 profit. That is called profit as well. So if the capital gain, so if we have we if we expend, let's say like if we expend $10, we expend $10, and we resell back at $20.
So
So
wait, if we what do you mean by expend?
let's say you expend $10, and then to make like a donuts and baking and so on, it's $10, but you sell back to the buyer at $20, meaning that you make a profit of $10. That is called profit as well.
You expend dollars.
Yeah, you expend
You
$10 for your raw
Wait,
material.
what do you have?
Mhm.
Wait, what is expand?
Expand. Oh, expand is including. So, for example, for the donut business, you expand from powder.
Wait. Expand is what? You lagged out.
Hmm?
Hey, bro, you lagged out.
Okay. So expand. I think
Wait,
it's
wait.
new slide, new slide, new slide, new slide. Okay. So let's say once here. So in order to make something, to cook something, let's say donuts. Okay.
Yeah.
To make donuts, I'm not pretty much sure, but as far as I think, you need to expand on. First thing we need to expand on what? The raw materials.
Oh, I think you said expand. Expense?
Yeah, expand. Okay.
Expense. I
Yes.
think you said expense.
Okay. First thing will be raw material. Right? It's like powder and so on. So the expand will be have raw material.
Flour.
Yeah, raw material like powder and so on, so on. Let's say all of them is $5, and also you may need the labor to cook, to bake something like that. So labor cost is roughly $2, and the electricity, because we also use the electricity, right, to bake, to use the
Yeah.
machine and so on. So electricity, let's say EDC, is another $1. So overall expense will be $8. This is all the expense, right? This is all the
Yeah.
expense. But when you sell, okay, let's say this is donuts here. Okay, look like we sell back at $15. No, okay, let's say $15. We sell $15 to the buyers. So the buyer, when buyer buy this donuts at $15, so what is this called? Selling price.
But
Selling price. And the official word we call it revenue. Revenue. So when revenue minus expend, what will it be? $15 minus $8. What will it be? What is the result of revenue minus expense? Can you guess?
oh, like 15 times subtracted by 8?
Yes.
Or like the word?
What is what is the revenue minus the expense? Meaning the income
7.
minus the outcome, like income.
7.
Yeah, it's 7, but what should be the term to be put? The incomes that we earn, the outcome that we have spent. What do we
Profit.
profit? Yes, profit. So revenue minus expense is the profit. So now you can understand like the overall use of the profit, right?
Yeah.
Yeah. Even sometimes it's not like this scenario, it's not the whole thing. Just you buy the pen from, let's say, from your supplier. One pen is $10, but then you resell back at $12. So what you have earned is $2 is the profit.
Yeah.
Okay, why we talk about profits? Okay, so this is the word profit. But when we earn the money from the interest or saving, from the saving or loans, that is called profit.
Interest.
Interest. Yes, that is called interest. But interest is part of profit. It's just part of profit. Mm,
Yeah.
okay. Oh, wow.
What about all the taxes
All
thing?
Yeah, all the taxes. Oh, we have a lot of tax, but as far as I know, the very high tax rate is called capital gain tax. Capital gain tax is a profit tax.
Like sales tax?
Mm,
Or like
selling tax. Selling tax is called value add tax, is the VAT. So the let me say okay, let me okay. This is the example. So now you make a profit of $7, right? This business
yeah.
make a profit of $7. So when you make the business and make profit $7, 20% will be subjected to the profit tax. So they set the
Wait,
rates.
are you talking about capital gain tax or profit tax?
The word, like the official word, is called capital gain tax.
Wait, capital gain tax is profit tax?
Yeah, it's profit tax. Capital gains tax. Capital gain mean your capital first. Your first capital is only $8, but now you can make it until $15, right? $15 because now when you sell, it's $15. So your capital gain from $8 to 70 to $15. So the capital gain is $7. That is just the word that they put it in. But the easy word to understand is called profits. Capital gain is profit.
So our profit is capital gain tax?
Yeah,
Huh?
profit is capital gain tax. It's like this. Why I say profit tax? Because like if we say capital gain tax, somehow it's quite difficult to understand, right? Unless we consider it that word and say like, oh, our capital is now $1 million. Let's say your capital now is 1 million. It's worth $1 million. Next year it will be $2 million. So your gaining is $1 million, right?
Yeah. Yeah.
Yes. Do you follow? Okay. Let's say here.
What about government tax? What is that?
Okay, okay. So first, let's say capital.
The government.
Capital. So let's say now your capital is $1 million. So your capital worth is $1 million, and you are doing business. You are doing business. Let's say this is in 2023, and in 2024, your capital worth is 1,900,000. Right? So how much did you gain?
Subtracted?
Yeah, we subtract it. We subtract.
900,000.
Yes. So you will gain. Your capital have gained. Capital have gains 900,000.
$1,000.
So the government say like, oh, you are become richer and richer. So I need to take tax from you to support the the state, to support the state, to support the government. So they take the tax here. So capital gain tax, I'm not sure about the rate in America, but in Cambodia, capital gain tax is subjected to 20%. 20%. So meaning that if you gain $900,000, you will pay 20% of this to the government, which is about, let's say, it is about $180,000 to the government. You need to pay this to the government, let's say, like the state. So that is capital gain tax.
So it's either 0%, 15%, or 20%.
Yes,
So 20%.
it, yeah, that is what we. It depend on each state and the country. Like this is
No.
yeah, this is example of Cambodia, like 20%. But the other thing that you always face is value add tax or the sale tax.
Wait, I'm not done writing. Wait, go back a slide.
Capital gain tax.
Alright, I'm done.
Okay. So the next thing that you always facing is called value add tax. Value add tax. Okay. Full word is value added tax. What is value adding tax? Value adding tax is, for example, you go to eat at a restaurant. Let's say the original price. Okay, let's say beef. Beef steak. Okay, steak. Let's say you order steak, $15. Well, drinks another $5. So overall, you will spend $20, right?
Yeah.
Okay, so total is $20, but you don't pay only $20. You pay with VAT, with tax, sales tax. Let's say the rate is 10%, so you need to pay. What is 10% of 20?
10% of 20. Is that 10 divided by 20? Is that 10?
10% of 20, 10%
So is.
of. Yesterday we also
No,
talked.
we look for. No, we're looking is.
Yeah, of is
20% over 100. X equals what? 10% equals 20. So 100x equals 20. No, 10 times 20, which equals. Wait, what's 10 times 20?
10% is
200.
10,
200?
10 over 100. Of meaning multiplications.
Wait, 10 times 100.
10,
10 times 100
ten,
equal.
wait, 10 time what? Time what? 10 times 20 divided by 100, right? 10 times 20.
10 times 20 over 100.
10 times 20 over 100, which is,
So we cross multiply, right?
no, it's not cross multiply. We multiply fraction with the whole number. So,
So we multiply across.
yeah, so 10 times 20,
So it's 200 over
uh,
100,000.
10 times 20, which is 200. Denominator,
Oh no,
yes.
it's 200 over 100.
So only 200 divided by 100, which is
Equals 100. Wait.
200.
it's,
Yeah, yeah,
it's 2.
yeah, it's 2. It's 2. So the VAT is $2. So you need to pay totals $22. $22. And this is value add tax. Actually you spend only $20, but the government say, oh, when you spend, you are rich already, so it's need to be subjected to tax. So that is the sales tax. So they add 10% more for the government. They add 10% more for the government. That's called value add tax.
Okay.
Okay. 22. Yes.